The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, after all the turmoil and volatility we've seen in these markets here, it feels like the past few sessions, we had a fairly quiet trading day on Thursday. Wasn't a whole lot of fresh news to talk about. The wheat market, probably the biggest loser. It did start nicely in the green and then really faded. Even soybeans, too, kind of fading into the close as things just kind of mixed to slightly lower across the grains. Cattle finding a little red as well. So maybe not a great day overall, but a quiet day. I guess we'll put it that way. Let's examine these markets, though, and talk about things. Joining us for a conversation, Dwayne Bussey with Bolt Marketing is with us here today. Dwayne, welcome back to Market Talk. Always good to chat with you. How are you, buddy?
Yeah, hey, doing well. Thanks for having me back on.
Well, where do we start? I know that talking about grain prices in particular is not a fun topic right now. Just with all this pullback and all this talk of record yields and just very bearish environment here. You look at a fairly quiet day, though, Thursday. Give us maybe a brief minute to pause and catch our breath, so to speak. What do you think?
Yeah, maybe a little bit. You're right. It is kind of depressing. I mean, I was talking to a gentleman maybe an hour or two ago about the market this year, and everyone's disappointed they don't have more sold, right? I mean, even the guys who are aggressive hedgers aren't hedged like they should, but we just never had that weather rally this year. And I'm one that like to play seasonals, like to play percentages, and usually you have a weather rally. And especially this winter when there was all this talk of La Nina and hot, dry, and I mean, I'm wearing sweatshirts every morning to football practice, so it definitely isn't hot and dry. I've got puddles standing around everywhere in the Dakotas here. Things are grass green. So yeah, you're really, I think the summary is there's no weather market this year, and we still have weather premium to take out. Even the last couple of days, Jesse, you got rains going across the northern plains and then Iowa, and now today in Illinois, and cooler temps than normal. I mean, I know, producers don't like to see USDA throw out that big yield number in soybean, but I gotta ask the question this week: is it going to get bigger? Because the weather is about perfect.
That's a good point. We've been debating that here on the show the past couple of days. Is 183 in corn, for instance, and 53.2 in beans? Are those the tops, or do big crops get bigger? I see the chatter on social media too. A lot of folks are talking and saying, this isn't realistic and this isn't going to happen. But it kind of comes back to what we've been talking about for a while now. The good areas continue to outweigh the bad areas, at least right now. But on the flip side of that, devil's advocate, and we could play off this a little bit here, Dwayne, does that change as we get some of these various crop tours going here the next few weeks? Do we find some hidden problems in this crop that maybe knocks the yield a little bit? So I think there's still things are up for a little bit of debate, I would say, over the next month still.
Oh yeah, and that's actually part of the fun of our job is that debate, right? And these crop tours they're just a lot of fun now, especially with social media, and I mean it's kind of like a play-by-play situation. I kind of can't wait myself, but if you argue the national yield, I got to tell you what to do. You make a spreadsheet, put the harvested acres in, and really it gets a little boring when you do that because you really look at two states. You look at Illinois and Iowa, and you put those in, and the rest of us, you can move quite a bit. But if those two states are high, it is really hard to pull the average down. I mean, for example, in South Dakota, they got us at about a record yield of 162. And I think that's a little high, even myself. I don't think the population's there. But you go to the west of me, that's where our yield is supposed to taper off as you go west. But genetics of getting better, and they're just grass green there. I mean, you can go to the hills and everything's grass green. It usually isn't this time of year. So maybe they bring the average up. So we'll play around with that spreadsheet. It's going to be hard. If Illinois is 11 bushels an acre above their record, it is really hard to pull it down. But of course, that's the great debate, right? And that's what will make it fun for the next month, I'd say.
Yeah, well, and fresh data out Thursday. I know DTN's digital yield tour is ongoing right now. They got Iowa to 205 on their digital yield tour. And I think they had South Dakota to 168. So, there's there's a lot of these data points that are going to be thrown around the next couple of weeks. So with all this in mind, I guess let's try to put some perspective on this. And you mentioned this at the beginning, some folks maybe aren't hedged enough. What do we do? What can we do at this point to try and manage our risk? Because burying our head in the sand is not a great option, right?
Right. It's not. Now, I've been on your show several times, and I've probably been one of the more bullish guys during the summer, thinking that we got to have a weather scare. Funds are already short. If La Nina pops up in August, that's all the beans need, and we'll have a weather story. Just didn't happen. You can blame me if you want. It just didn't happen. Normally it does. It just didn't this year. But okay, so I got to play catch up, right? And going into this U.S. report on Monday, we were getting pretty bearish, knowing that the weather scare was kind of done, expecting a higher yield, did not expect the higher acres. But, that FSA data is out now. We gained 1 million acres. Let me summarize by saying soybeans are bearish, even at this price level, Jesse. I mean, ending stock is 560, but that's with an increase in demand of 250 million bushels, which is really in question now, isn't it? So I don't even know if we find a harvest low and do this really nice rebound. I'm worried come November, December, January, February, I think ending stock might grow every month then too from USDA, because I think demand is going to be tweaked down unless you see a lot of export sales like we did this morning, a new crop above 1.3 million metric ton. You need a lot of that to get caught up though. So what do you do? That was your question. Listen to me ramble forever. I think you can still sell. You can sell straight on the board on rallies like we had today. I like put call spreads too, because I just don't see the upside. So I don't mind selling calls. I'm usually not much of a guy for selling calls. I think you can do fence. Cash, you can just lock in the cash. I know nobody likes the price, but they're really going to hate it if it drops down another 70 cents or so, which I think is possible. Well, and the last thing I would recommend on the soybean side of things is don't pay for the storage. Don't put it in commercial storage and just leave it there until next June and call and ask me what to do. Because like I said, I don't see a big rally this winter. Put it on farm storage, capture the carry in the market right away, because I think there'll be a big carry in the market. Sell it, and we can buy it back if Brazil has a weather scare.
How about the corn side? Any thoughts there? I know prices aren't great there, but we're still hovering around 4 on the board. I mean, is it a little better picture in the corn market, Dwayne, or not?
No, I think it is a better picture, and I won't go on a 20-minute rant on corn because it is a better picture. My summary is actually maybe that's a crop that's okay not to do anything if you go very aggressive on the soybeans, because I think the soybeans are bearish enough. I think it's going to pull corn down another 20, 30 cents. But if you're 100% sold on soybeans, I feel a little bit better about not being heavily sold on corn. Corn, that ending stock number, Jesse, isn't getting much bigger, is it? Even with the higher yield. We lost a few acres. Demand is solid there, and the export demand actually backs it up. We're the cheapest in the world. Believe it or not, I think you take that ending stock and put it below 2.0 billion, which I know say 1.95. That's still a lot of corn. But I think the funds that would be heavily short will be a little bit nervous then. And I don't know if the Ukraine crop is really there, but we're missing China buying, right, to really rally the market. I'm not bullish. I'm just more neutral corn. Hopefully you have 30, 35% sold from before. And if you're in that situation, just hold on it. If you're not, you better definitely sell a rally to 410, 415.
What about the wheat folks? Any thoughts there, especially as we're getting ready for spring wheat harvest already? I know we've gotten HRW off, of course, things like that. I mean, any thoughts on this wheat side of the market, Dwayne?
Jesse, I'm really surprised at that market this week. Especially today. The Russia-Ukraine war is really heating up again. Now, maybe we proved through the war that wheat just finds a way and gets out there, but I mean, we've wiped all that premium out. Things are still going on. The supplies are down. I'm shocked we can't find more of a low there and rebound. A little depressed with that market today, especially with the U.S. dollar a little bit lower. I think we got to be near a low. Doesn't mean we have to rally, obviously, but I'm more a bull of the wheat market. Actually, I think that's the first grain that finds a bottom and maybe tries to drag us out of here. But we need to see some better demand, obviously. So. But I like the wheat complex. I'm a little depressed it didn't rally today.
How is that spring wheat condition up in your neck of the woods? What are you hearing from folks throughout the Dakotas, for instance? How's things looking right now?
It's good. It's really good. It's which we've kind of known. I mean, it was cool, damp, wet. Ryan Wagner works in our office or in our branch office, and he's saying 80 bushel plus on the first couple of fields, which he'll probably kill me for saying that, but and maybe I'll blame him. That's probably why the wheat market's down today, because he's got these big yields coming out. There will be some problems though. The whole falling numbers and test. Wheat always seems to find a way to take something from you. But if you're just asking me how's the spring wheat yield, it's very good.
We're talking with Dwayne Bussey from Bolt Marketing here today on Market Talk. Dwayne, one other thought I'll throw at you in the grains, and I want to touch on livestock before we wrap up today. But I know some folks are talking, and it's a tough conversation to have, especially if you're looking at selling any new crop or thinking about next year already, saying, how can I sell at these prices when my cost of inputs is still super high, when fertilizer's high, when seed, chem, everything else. I mean, you're a farmer too. You're not just a broker trader. You're a farmer as well. So, I mean, give us some thoughts there. I mean, how do we navigate that whole environment with our marketing plan through this down cycle right now?
Yeah. The first thing I remind guys that have that question, because we're getting that a lot, like, well, I'm not making money. Just back up in your memory just a little bit and realize that's what farming usually is. Actually, not making money all year long, but for the majority of the year, you don't make money. And then usually you have that weather scare that I know we didn't have this year around May, and the market rallies enough so you can sell and make a profit. Actually, this is when marketing gets more important, Jesse. I mean, when we're at $6 corn, I can tell you just about anything and you're going to make money. And my job maybe isn't important. So latch on to that broker that's going to help you hedge wise. If anything, this gets to be more fun for me because we can help producers, hedge for profits. And it's not the whole missing out and I didn't get $8 corn. So this is the way it usually is, Jesse. I mean, we've got to manage through some losses and some tough times. I mean, it's not going to be making money every single year. Otherwise, this is already the best job in the world. They'll just have everyone wanting to do it, and rents will be high, inputs will be high. So lower prices aren't bad, especially right now. Let's go ahead and take soybeans to $9 flat, November on the board. Guess who's about to plant? South America. If we have $13 beans, guess what? They plant more acres. So this is just the ebbs and flows of markets, and it's okay. So just make your marketing plans. Yeah, you might have to generate, some marketing just to get break even this year. And maybe you don't make a ton of money this year, but that's kind of half normal, Jesse.
Yeah, no, that's very, very true. How about the livestock sector? I know. Let's start with the hogs. Good green day there Thursday. I know August went off the board. October was at a pretty hefty discount, and we really didn't make it up at all Thursday. Kind of hovering around 75, 76.50 in October hogs. But still, the hog market. We saw that big run up in that August contract, getting into that 90 level. Now we're into these back month contracts. These fall winter contracts. I mean, what's your feeling in this hog market? Is some of this board price action now probably going to be fair value in hogs? What do you think, Dwayne?
I have no clue. No, I'm here all week. What expert advice, right? Hogs are so tough, Jesse, to understand. I mean, I'll tell you this much. Here's what I do know is cash and cutouts seem to be trending lower and at a moderate rate. So I think futures are probably at what, like you said, at a fair value, I think, for what's happening on the fundamental side. I think you're going to see more wild swings like this, up a couple dollars for 3 days in a row and then down $3 or $4 for 3 days in a row. It's just kind of the way this market trades anymore. And it's maybe the lack of volume that starts to make it do that. Because guys like me are like, well, I don't know. If you're trying to speculate that market, good luck. I would say if you get those 3 days in a row up, I think hedgers should look to hedge, Jesse, because the cash and cutouts are not trending the right direction. Questions of the economy, but now, of course, now the stock market's up 500 when I mentioned that. But I'm just worried, overall costs of protein are just high. So I'd hedge on, big rallies like that.
Well, and to wrap in with the hogs there, I mean, the demand picture too, of course, is such a big part of this we talk about. And the same on the beef side too. You kind of lump it all together. I mean, Labor Day demand is, I mean, we're essentially in that window, and that's really it until we get to, I would say Thanksgiving, but that's mostly a turkey holiday. So, I mean, we're talking Christmas, it's kind of the next big demand window domestically here. So, and you looked at export sales, it was technically a marketing year low for pork on Thursday. It was a marketing year high for beef. But, and with the economy, you mentioned the Dow up 500 points, everyone thinking that things are a little healthy, but maybe not. There's a lot. For me, there's a lot of demand questions, I guess, when it comes to the protein sector right now.
Yeah, that's a good way of putting it. Today everything's good. The stock market's up. But I, like you're saying, I'm questioning the whole health of the economy. Now, box beef has been higher this week. It looks strong, one day down, but you're still around 314. But overall in the supermarket, meat still isn't that high priced. Surprisingly, after COVID, when we shot up with this box beef price, we've held in there fairly cheap. And I don't know, I go out to restaurants and everyone's still out and buying things and they're packed full. So I think we're okay, but I'm concerned about the cattle market, I guess. Seasonality usually has us trending lower. We're going to have more cash cattle available. Feeders, the chart broke a lot, obviously kind of sideways pattern now, but then a kind of reversal today. They're still long. If you look at all of our commodities and you think the economy is in trouble, to me, the feeder cattle market is a heck of a sale then. If you look seasonally, you can look at a continuous chart and that thing's gone up since COVID so much that I feel like you could drop to 215 and still be in a bullish market. So I'm a hedger. If I'm wrong, I'm wrong, but I want cow-calf guys to lock this in on the board because it's a very good price.
Dwayne, I know we're up against the clock. Folks want to reach out to you for a conversation there at Bolt Marketing. How can they get in touch with you?
Yeah, they can call me 605-448-2365, and I'll try to keep my conversation shorter so they can actually get through on the line this time, but I like to ramble sometimes.
And I know that website too is boltmarketingllc.com. Dwayne Bussey with Bolt Marketing. Always good to talk with you, my friend. Thanks for being with us today.
Yeah, thanks for having me, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.